DXA Investments has about $200 million in investments in Brazil. You have 7 PE companies, have sold off more than 2. You also, over the years, have invested about a private credit in about 1,000 companies. So you have the beat on the small and medium-sized businesses right now.
Exactly, yeah.
What is the effect of the election from where you sit?
Well, I think elections affects any single country when you're planning and what's going to happen to inflation, what's going to happen to interest rates, if you're going to do a 10-year plan for a company, how's that really going to roll out. Of course, that happens everywhere. However, in Brazil, there's a story on the big companies and there's a story on the small and medium enterprises. And of course, there's VC also. So you have all sorts of different stories that they depend much more on the KPIs of that specific company than on the overall economy. So I think that when you're looking under the hood, there's several opportunities that really don't depend on the politics side. But of course, we're all watching this soap opera, which has been the Brazilian elections. We used to have about a month and a half ago, the front runner was President Lula, former President Lula, who's in jail. And now we have two guys which are candidates, one left wing, one right wing. And we have this a situation with the stock exchange happening every single day, depending on what the results of the newest polls are happening.
So that's going to be like, so there's the micro and the macro, I guess you could say. So, Neil, you're going to cover the macro.
Yes.
Do you want to touch Brazil as an investor?
Not at the moment, because I think whether you get the far right person or the far left person, I think for international investors, it's about, are they going to address the fiscal challenges and of course they may address them very differently, and until we actually know, and I think probably we'll need the second vote on October the 28th to find out. I think it's the credibility of that policy, and I think anything, as we know almost globally now, anything that affects pensions is not popular. I mean, we're seeing it in Italy and all these type of things. So I think it's very hard to see how the structural reforms will get put in place. And when you then say that China, I would argue, is slowing down, trade is not going to help. Brazil needs a relatively buoyant global economy because it makes a lot of stuff for the rest of the world.
But I think there's two stories. There's the private story and there's the public story. And I've seen you guys discussing a lot about emerging markets in general here. Now, there's not so much premium to go to Brazil. That's true on the public markets. If you look at the Brazilian CDS, which is at, 250 basis points right now, it means that you have 250 basis points more to go to Brazil. Really doesn't make sense. And I think Neil is right in regards to what that affects the public markets. But when you look into private markets, we've been underwriting private credit at 1,000 basis points above the yield curve. So it's a matter of being able to look at this misperception. And when you look in terms of the U.S. and even globally, the growth of private equity and private credit, it's been this huge mass of money going into it. And it's very hard for general mutual funds or general investors to trade it through the public markets.